Hello and welcome to VOP Business. I'm Esther Mwachuku. On the show today, we will be turning our spotlight on the most important issues in the economy. Now, the Nigerian Export Promotion Council says it is intensifying its efforts to ensure an improvement in the quality of packaging and labeling of Nigerian products for increased export activities. According to the NEPC, companies operating in Nigeria achieved $1.35 billion from the export of 167 non-oil products to other countries in the first quarter of 2023, which is an 8.5% increase from the $1.24 billion achieved in the same period of 2022. Despite the improvement, Ezra Yakusak, CEO NEPC, notes that issues around poor packaging still pose a major challenge, causing the rejection of Nigerian products in the international market, especially Europe. Speaking at the technical session for small and medium enterprises organized by NEPC, he said the session looks to enable product assessment, transfer of technical skills in packaging and labeling, a unique opportunity for the SME exporters to receive hands-on practical solutions, action plan for each of their products. This, he said, is a reaffirmation of the Council's commitment towards facilitating SMEs to overcome challenges posed by technical barriers to trade and in particular packaging and labeling for export. He said that during an earlier exhibition which was held to commemorate the 2023 International Women's Day, the NEPC noted some gaps such as poor or inappropriate packaging arising from incorrect cushioning materials, mismatched sizes, misbranding, wrong labeling, incorrect or ineligible graphics, infringement on trademarks, lack of barcodes, which the Council sought to address. Now, the federal government has spent $102.35 million servicing external debts in January 2023. The data from the Central Bank of Nigeria's weekly international payments show that the amount spent in January was 146.17% higher than the $45.64 million spent in December 2022. This occurred as the federal government struggled to boost its revenue base despite its revenue generation efforts. Also, VOP-TV gathered that the Federation Account Allocation Committee shared 750.17 billion naira among three tiers of government in January 2023. Also, the figure represents a decrease of 240.02 billion naira compared to the 990.19 billion naira shared in December 2022. In December 2022, however, Nigeria spent $2.4 billion to service external debt, which was a slight increase from the $2.11 billion spent in 2021. Also, the federal government deducted over 78 billion naira from allocations made to the states for external debt servicing. This, however, was data gotten from the Federation Account Allocation Committee disbursement report published by the National Bureau of Statistics. The deductions were made in 2022 from the allocations given to state governments from the Federation account. The Federation account is currently being managed under a legal framework that allows funds to be shared under three major components: statutory allocation, value-added tax, distribution and derivation principles. The International Monetary Fund recently disclosed the federal government projected to spend 82% of its revenue on interest payments in 2023. According to the IMF, external debts, which includes that of the private sector, will rise to $121.6 billion. We will have Barrister Fred Nzako, he's an economic analyst, to help actually delve into these issues. He'll be joining us very shortly virtually to talk about this. Now, if we recall, it is closed in a table of projections in its IMF Executive Board, which concluded 22 article consultation with Nigeria in summary. The projections showed an improvement in the share of the government's revenue used as interest payment, with interest payment falling from 96.3% in 2022 to 82% in 2023. However, the interest rate payment was 86.1% and 87.8% of the federal government's revenue in 2020 and 2021, respectively. Now, joining us to talk about the external debt servicing is Barrister Fred Nzako. He's a political enthusiast and economic analyst. Barrister, good afternoon and welcome to VOP Business. Can you hear me, Fred Nzako? All right, I was trying to connect with Barrister Fred Nzako so he can talk about how comes we are actually servicing external debts. There's quite a lot to actually look into, especially for the projections. All right, we'll continue with a crisis rocking indigenous energy company Seplat Energy PLC, which appears far from over. But the firm says it has taken steps against exporte interim orders against it and some of its officers granted by Justice Iyan Ekwo on the Federal High Court sitting in Abuja. Now, VOP TV gathered that Justice Ekwo Juliet Baker, and 2 others versus Seplat Energy PLC and 13 others granted ex parte interim orders which restrain the board chairman, the named independent non-executive directors, the chief operating officer, and the company's secretary from operating or functioning as officers of Seplat Energy in any capacity or otherwise conducting the affairs of the company. Now, in a filing on the Nigerian Exchange Limited on Thursday, Seplat said that it had filed an appeal and a motion for stay of execution of the orders. Seplat Energy has been advised by its legal team that the interim orders, which are yet to be served on the company or its officers, cannot be enforced until the Court of Appeal has heard and determined the appeal and application for stay of execution. In the statement, Mrs. Chema Afe of Seplat Communications and External Affairs said the interim orders were yet to be served as on the company or any of the affected officers. Now, this is a third similar petition by minority shareholders between March and April 2023 against the company. The company had previously reported that the Federal High Court in Lagos, presided over by Justice Aneke in Moses Ibrude and 4 others versus Seplat Energy and 2 others, vacated the ex parte interim orders that require the company's CEO to step aside. The Federal High Court in Abuja, presided over by Justice Ekwo in the Federal Republic of Nigeria versus Seplat Energy and 8 others, formally dismissed the immigration charge against the company and some of its officers and fully discharged all named officers. This discharge followed the notice of withdrawal discharge filed by the Director Legal of the Nigeria Immigration Service and the company's cooperation with the immigration authorities. Now, the NACO Aviance, West Africa's ground handling service provider, recorded a milestone recently as it started the exportation of food items to Europe under its new subsidiary, NACO Foods and Beverages Limited. It has commenced exportation of fresh pepper after being certified by the Nigeria Agricultural Quarantine Service and after consultation with foreign food standard agencies. The initiative has been touted by analysts as one that would revolutionize the way Nigeria's produce is packaged for foreign markets. This feat is a first by any major operator at the airport and comes on the back of an aggressive push by the federal government for increased export of Nigerian products. The new export business by the company is in conjunction with its appointed partners to export the first batch of the exports consisting of high-grade fresh Nigerian pepper. Indranil Gupta, the Group Managing Director, CEO of NACO Aviance, said this development was coming at a time when quite a number of stakeholders had identified packaging as a major challenge for Nigerian exports. Gupta added that the company is doing a lot to assist local producers of agri-products in realizing their dreams of exporting quality commodities to markets in Europe, America, and Asia. Explaining the process which led to the commencement of the food export, Emmanuel Ila, the Senior Business Development Manager of the new business, NACO Aviance, pointed out that the project is part of NACO's larger expansion strategy, driven by 3 major objectives: growth, risk reduction, and profitability. According to Ila, the GMD CEO of the company, Indranil Gupta, drove the initiative and has provided support and technical know-how so far. Now, the energy tycoon Femi Otedola has received $19 million in arbitration award over the share purchase agreement involving the sale of Forte Oil, now Adova PLC. The settlement followed a ruling last October by the London Court of International Arbitration, ordering Ignite Investments and Commodities Limited, the special purpose acquisition company of Adova's chairman Abdulwasiu Sawami, to make SPA payments less the amount awarded for one of the claims by Xenon Petroleum. Ignite Investments in 2019 agreed with Forte Oil to acquire 983 million shares, equal to a 75% stake from the latter, a deal worth 64.9 billion naira to be paid in 3 installments. The company would later allege a breach of warranty by Zenon Petroleum in respect of the SPA, causing Ignite Investments to launch a legal action where it made claims against Zenon. Zenon filed a counterclaim against Ignite Investments in reaction to a claim filed by the latter at the LCIA after an initial move to resolve the dispute failed. The LCIA ruled in favor of Zenon in 3 counts, 4 claims last October. However, in February, Mr. Shawami offered minority shareholders in Adova 17.38 million per share, translating to a total of 16.9 billion naira, in order to buy out their 25.9% stake, which is about 970.7 million shares, and take the company private. The offer price of 17.38 represents, or rather 17 naira 38 kobo represents a premium of 22.44% and 24.38% to the 30-day and 60-day volume weighted average share price of 14 naira 19 kobo and 13 naira 97 kobo respectively on the 30th of November. All right, now we have been able to establish connection with Barrister Fred Nzako, who is an economic analyst as well as a political enthusiast. And we want to talk about the fact that we are still doing what we call servicing external debts. Barrister Fred Nzako, welcome to VOP Business.
Good afternoon and
Good afternoon. Welcome to VOP Business today. Now, we also have this scenario where there is a rise when it comes to external debts, and the federal government literally is just servicing external debts. Now, in 2022, 2.4 billion naira was allocated to service its external debt rather, which has a slight increase from the $2.11 billion spent in 2021. Now, we still have a lot of other debts that we've been borrowing. However, we're trying to service the external debts that we have incurred. That is not even the main payment, actually, for most of these debts that we have incurred. What does that stipulate for the economy in the next quarter?
well, what it means is that it leaves the economy without adequate funding because what is made is spent on debt servicing. Of course, you know that Nigeria is faced by a terrible in foreign and domestic debts. Foreign debts, because both multilateral and unilateral debts, and debts they are owing organizations, the World Bank, the IMF, and other foreign nationals. We also owing internal debts, the one you call domestic debts, and we are even owing the central bank. All these funds, they call ways and means, loans to federal government, and they all amount to debts. And it's also important to note that when we talk about debts, we are not only talking about debts owed by federal government, but also debts owed by the states. The totality of all that is what you call the debt owed by the federation, and that is worrisome because sometimes when the states want to borrow, the federal government will give them the collateralization that they require before they get access to the fund. And that is why when they fail to pay back, the said allocation can be deducted at source to pay the creditors. And what it now means is that even when federal government is owing, then it is the whole country that is paying that. And that is why when we do our budget for the year, large chunk of the budget goes into servicing of debts and the payment of some debts. In addition to even the moratorium. The moratorium is when you want to extend the period of payment. You have to even part with some money because of the time value of money, which is notable in economics and international finance. If you're supposed to pay a country, say 100 million US dollars, and this year it is due this year, and you're not ready, and you want them to extend it for you, say to be paid in the next 5 years, that is called moratorium, and you have to pay something for that. By the time you add up all those, they add up to the debts of the country, and our debt profile is very, very high. Now that we are losing a large chunk of money to service the debts, not just to even pay the the obligations, but the servicing, it leaves us with less funds. The implication is that we now have less funds to tackle our various financial requirements.
All right, Barrister, we now have this scenario where the federal government deducted over 78 billion naira from allocations made to the states for external debt servicing. So now monies are deducted from allocations that are meant to help fund states, pay salaries, and other development projects that the states are meant to incorporate in their various constituencies. We see the federal government taking out of these allocations to service the external debts. One would actually say that what is the plan, what is the framework, and how long will this take? Because once this happens, it means there's a short change in the allocations given to states, especially and state governors. So does that literally mean that most of the projects being planned by state governors on their various states, once these monies have been deducted from it, there's a short change and most of the objectives meant to be done by the state governors in the various states may not be achieved? Is that a possibility?
Well, I'm sorry, I didn't get some aspect of your question because the line was having some form of fallback and some
All
crack.
right,
But
I will
a little
repeat
I
again.
got.
I
Yeah,
said the federal
yeah, yeah.
government deducted over 78 billion naira from allocations made to the states for external debt
Yes.
servicing. It literally means that allocations made to states in order for them to fulfill what their objectives are within their various constituencies in the state, they have deducted some monies from the allocation made. So it means most of the objectives when it comes to paying salaries, infrastructural developments, and having to upgrade some viable sectors within their states will not be possible because monies have been deducted from the allocation. So how did the state government meet up with their required objectives within a stipulated time frame?
Well, the federal government will not deduct such funds if the states are not involved. In most cases, the deduction is, like I said earlier, to pay the state obligations when they are unable because the federal government guarantor before they get such funds, such loans from wherever. And in the event that they fail to meet the federal government has the authority. They sign that authority to federal government to deduct the funds and be able to pay their own obligation. So, like I said, the implication is that the states will not have the fund. And that is why we will continue to borrow. While the state is borrowing, the federal government is borrowing. It is a continuous basis. Nigeria has become a terribly debtor country, debt-ridden country, because it's like a vicious cycle. The little money you from other your generation of revenue, you now use the money to service debts and to pay for some obligation, and you now come back need the money to carry out the functions of government. And when the money is not there because of the obligations of debt payment and debt servicing, you now borrow another one. So it's a continuous process of you borrow today, you pay tomorrow, you borrow next tomorrow, you pay, and gradually, that's how we came to the over 80 trillion naira debt obligation that we are talking about. If we had cut down our code and managed our resources, it would minimize the incidences of borrowing. And if we had plugged a lot of the leakages and loopholes, government, and would have saved a lot of money that would have used. So if you continue to be prodigal, if you continue to lack the financial management with the resources that you have, then you'll be compelled by circumstances to keep borrowing. And that is why you keep wondering, why do we have large chunk of debt obligation commensurate development, infrastructural facilities to show for it? Because the government will always tell you that it is necessary to borrow because you want to invest in productivity. Now the government will borrow and you are not seeing the effect. It is simply because we are borrowing to service consumption that do not go productivity. And when you do productivity, That borrowing does not bring out the money, the funds needed to pay itself, and you keep borrowing. The ones you have, you use to service debt and pay some debt obligation. It is a vicious cycle which needs critical thinking, very studious efforts, and sacrifices on the part of those in authority for Nigeria to exit the quagmire, the terrible financial quagmire we have found ourselves.
All right, Barrister Fred Uzako, thank you so much for your input right here on VOP Business. I do appreciate you taking your time to help us shed more light on this.
Many thanks, many thanks.
Now, still on VOP Business, the Niger Delta Development Commission, NDDC, has lauded the Senate over moves to probe the agency's account from 2021 to 2022 for illegal spending of 1.4 trillion naira. In a statement by the Director of Corporate Affairs, NDDC, Ibitoye Abosede, on Thursday, the agency appreciated the concerns expressed by the Senate during its plenary on Tuesday. It will be recalled that the Senate had at its session on Tuesday constituted an ad hoc committee to probe the financial activities of the NDDC for 2021 and 2022 budget estimates. The Senate also stood down consideration of the 2023 budget of the NDDC for further information and clarification of the figures contained in the budget. The NDDC in the statement said it respected the oversight functions of the Senate and was ready to cooperate with the investigation committee. Now, the Minister of Finance, Budget and National Planning, Dr. Zainab Ahmed, has urged insurance operators in West Africa to reposition the industry for global competitiveness. She spoke on the West African Insurance Companies Association Educational Conference and celebration of its 50th anniversary in Lagos State, Nigeria. The conference theme was repositioning the insurance industry in West Africa for global competitiveness. They are now the objective behind the African Continental Free Trade Area, she noted, was to accelerate intra-African trade by providing a single market for goods and services, facilitate movement of persons in order to deepen the economic integration and prosperity on the continent, as well as boosting Africa's trading position in the global market by strengthening Africa's common voice and policy space in global trade negotiations. Mrs. Ahmed emphasized the need to establish high-quality insurance database to provide a holistic view of the industry's operations in the sub-region. The Vice President of WICA, Mr. Eddie Efekoha, noted that WICA is the umbrella association of insurance, reinsurance, and insurance broking companies in West Africa. Over the years, he said, WICA had provided a platform in the region to enrich the knowledge of insurance, share business information, and network as insurance players in the sub-region. He said a theme of the conference captured its thoughts and expectations, while the resource persons have been carefully selected to address the issue in a manner that presented all shades and perspectives. Meanwhile, the Naira weakened against the dollar on Thursday at the unofficial market due to an increase in demand for the greenback. After trading on Thursday, Naira depreciated by 0.6% to close at 746 Naira to a dollar compared to 744 Naira closed on Wednesday at the parallel market. The local currency appreciated marginally at the investors and exporters forex window by 0.06% as the dollar was quoted at 462 Naira 73 kobo to a dollar on Thursday, as against 463 Naira on Wednesday. Now, most currency dealers who participated at foreign exchange market auction on Thursday maintained bids between 460 Naira low and 467 Naira high per dollar. The daily foreign exchange market turnover increased by 79.88% on Thursday to 178 Naira, rather $178 million from $99.33 million on Tuesday. On Wednesday, it was recorded a sharp fall in the value of Naira following increased demand for dollars by importers at the parallel market, also known as the black market. The demand for the dollar was mostly from importers, particularly from those who deal in oil and gas and who could not access foreign exchange from the official market, according to a parallel market operator. The Nigerian Treasury Bill's secondary market closed on a positive note, with the average yield across the curve decreasing by 38 bps to 6.71% from 7.09% in the previous day. And that is a wrap on VOP Business today. My name is Esther Mwachukwu. Do subscribe to our YouTube channel at Voice of the People TV, on our social media handles at VOP TV Live. To have yourself an amazing day.